Business owners often feel how the business is going, but let's face it, in most instances, we're operating out of intuition. And I'm not saying your intuition's bad, but if your decision making begins and ends with gut feeling only, you run the risk that many contractors do, which is relying too much on instinct until it's too late. But a simple tool that you can institute immediately is a KPI dashboard. And a KPI dashboard sounds fancy. It may be a term that's probably even overused, but I will say that if you just deploy this one simple tool, you can systematically track a handful of metrics in your business that they're proven to drive results. This makes decision making much easier and quicker because time is of the essence as well. You can leverage these metrics to make data-driven decisions. These dashboards really allow you to know whether you're on track or off track, and it's that simple. For contractors, a useful dashboard may include things like sales, gross profit, net profit, your cash balance, even labor efficiency ratio or LER, which is really a measurement of your gross profit and your total cost of employment or labor measured against each other. But these are all lagging financial indicators. They're important. They're great indicators. You should be tracking them, but they are lagging. I would pair these with a few leading indicators. A couple that I recommend for contractors, those of you who are in construction, be looking at your sales pipeline, be looking at your contract backlog, which is your open orders that have yet to be fulfilled. Why? Because these are actually leading indicators. This is what will eventually hopefully be your future sales. And this is a great predictor for you in the future. Last but not least, it's not only important to track KPIs like the ones I just mentioned, but also to track and report them over time, right? Because a number in a singular fashion may not tell a whole lot, but when you stack those KPIs on a month-to-month basis, I recommend 13 months in terms of a look back. These become really important. They really allow you to tell a story. When you stack these metrics side by side, month over month, it is very easy to spot trends, variances, probably some outliers, both high and low, that may require further exploration, maybe even an explanation from yourself or a key leader on your team in your organization. A dashboard is a quick, simple way to visualize the important metrics that drive your business results, while creating some clarity and visual accountability for your leadership team. Another extremely important financial tool for contractors is to use work in progress reporting. Have you ever looked at your profit and loss statement and thought, this does not make sense? I have way too many peaks, way too many valleys in my revenue or my profit. Have you ever thought to yourself, how can I possibly have negative gross profit? It doesn't mathematically make sense. And the truth is, you're right? You're absolutely right. It doesn't make sense. Your financial statements don't match what work your company is actually performing. There's a disconnect there. And that work in process reporting, or WIP, that report helps your financial statements tell the truth. Namely, WIP allows for adjustments to be made to your financial statements that reflect the revenue you earned, even if you haven't invoiced for it yet. For example, maybe you're a contractor and you're running a kitchen and bath interior renovation project, right? And you sold this project for $400,000. This job might take you 4 months to complete. You may have gotten a $50,000 deposit to start the job, and maybe after 2 months of work, you invoice for, let's say, another $50K. All in, you've invoiced so far $100,000 2 months in against that $400,000 job. But you're a smart contractor, you have your job costing going, and you did your project to date job cost for this specific project after 2 months, and you realize you've already incurred 50% of the total job cost that you estimated. So you've invoiced for $100K, 25% of the $400,000, and you've incurred 50% of the total cost of the project already. You've technically earned 50% of the revenue, which would be $200,000. Quick math tells you, man, I am underbilled by $100,000 here. You've earned $100,000 more than you've invoiced. Work in progress and the percentage complete revenue recognition, these are some fancy terms that accountants use, but at the end of the day, we can make an adjustment of $100,000 in this example to your profit and loss statement to recognize that difference. This is balancing or smoothing your profitability out on that financial report. This is an indicator that your costs are ahead of your billing. This can be really helpful for cash flow planning. Okay, but you're thinking to yourself, this is a lot of fancy accounting talk, percentage complete, revenue recognition, accrual accounting. Does this really help me. Does this actually matter? And I will tell you, this helps in at least 4 areas for real. Number one, as I mentioned in that example, this is going to allow for cleaner, more consistent financial statements to help you better understand performance and profitability, right? So this is actually going to make your financial statements more optimized to help you. The second thing is this is going to allow you to look at jobs that are slipping behind. Maybe your cost is actually overrunning beyond your schedule or beyond your estimate, or maybe you're just behind on billing and that needs to be addressed. But if you're consistently producing a work in progress report every single month and you're reviewing it or somebody on your team is reviewing it, this WIP report will feed important information to your cash flow forecast. It will feed important information to your financial projections. 2 more tools that we'll talk about later, but this is actually going to help you make better decisions. Number 3, this is going to improve conversations with banks, lenders, bonding agents. They want to see that your financial performance is reliable and it tells a consistent story. Last but not least, this may even impact your tax conversation for year-end with your CPA. If you're on accrual-based accounting for tax purposes, your work in progress or your percentage complete revenue, as we mentioned, could significantly impact your year-end profitability. In summary, your WIP or work in progress shows how much revenue you've truly earned on each job, even if you haven't billed or been paid for it yet. It helps you spot those underbillings and it helps you track job level profitability in real time to make sure you are making smarter decisions, data-driven decisions before it's too late.